Hi everyone, welcome to this session. It's this afternoon for us here in the UK, where we are going to be looking at what the markets are doing, in particular the stock market. We're going to be looking at the indices and possibly some commodities as well, from the perspective of VPA and seeing applying the volume price analysis methodology. But before we start, as usual, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. It's something slightly different. We're actually going to go straight to some charts and have a quick look around to see what is going on with regard to the fundamental news. Today, of course, later on we have the FOMC minutes. If I just move that out of the way. Let me just pull up my Firefox browser. Here we are. I've got all my bits and pieces up here. I'll just start off with the news that we have had so far. Those of you who come along to the Forex session will know that I have at least 3 economic calendars, which is always makes David chuckle somewhat. The most comprehensive one is this one, which is from Trading Economics. And the main news of the day that's come out so far has, certainly for the US, has been the CPI data here. The CPI is an interesting inflation metric because it, in the sense that it doesn't really reflect the RPI, which is the retail one, because the way it's calculated, it actually excludes things like energy and food, because the argument being, well, those elements can be very volatile. They can be affected by seasonality, etc., etc. However, you know, us mere mortals, to us, the RPI is a much better gauge of whether, you know, we are in an inflationary environment. Of course, we know we are, given what the energy costs are going up, food is going up for all sorts of reasons. But for the purposes of the market and the purposes of traders, not so much investors, traders, the CPI is what the market pays attention to. And obviously for the US, also the PCE, which is the Fed's preferred metric of inflation. And we will know what the Fed's thinking on inflation because we have the minutes later on today, which is 7 p.m. our time. The numbers, it really is, you know, this is the actual, this is the projected, this is last month. And what we have with the core inflation, that came in on target exactly. It hasn't budged. The inflation rate, that has gone up very slightly according to this, you know, set of metrics. And then you have the core inflation rate month on month. That is actually, it's the same as last month. It was projected to fall, but it hasn't. The market is kind of, I personally see that as a bit of, you know, some headlines will say, oh, inflation is, you know, it's terrible, etc., etc. It's not brilliant, of course, but it's not running wild, according to, you know, this set of statistics. The issue then is well, how is the market going to interpret it, and how is that going to have an effect on the price action? Well, the opening, the indices have been kind of ticking up. They've now taken a bit of a dive down. You always get a knee-jerk reaction to the data, then it settles down, and of course, it's also, the markets are also reacting to the open, and also importantly, we have earnings season. Now here we are, and they have already kicked off. We can see here JP Morgan's already reported, and you really need to, not only do you need to keep an eye on, obviously, if you're day trading stocks or you're trading stocks over, not necessarily intraday, but over a short-term time period, you really need to know when they are going to be reporting earnings, along with other bits and pieces as well. And the consensus is that actually the numbers that are going to come through are going to be quite positive. Whether that's going to, provide some comfort to what's been happening in the indices, which have, to be honest, have been all over the place. We will have to wait and see. And I know David is going to look at the daily charts in more detail, because the daily charts, they do tell a really interesting story, and we spoke about it last week. Well, I certainly refer to it to say that, if you are going to be intraday trading, have a look at what the previous day's close is, because that will give you some kind of hint of whether what's going to be carried through, particularly if you have a very strong close. And by a strong close, I mean a candle with a dirty great wick at the bottom, because what that is telling you is that there has been buying there. That is, even without looking at the volume underneath it, just the candle itself is a strong candle. This is the Russell. Now this is the speculative index. So the Dow is the one, is the shorthand that the media use. Oh, the Dow's up, the Dow's down. But you have to remember, the Dow's only 30 stocks. It's hardly representative of the broader market. Of course, then we have the ES. So that's the futures for the S&P. So we look, sometimes they clearly look at the S&P, and then we look at the Nasdaq as well. That's the tech one, and that's up as well. Yesterday was actually a doji candle. A doji is not necessarily a reversal signal. It is more it's a candle of indecision. So you could say, well, it could go either way, as it were. But the Russell it's a purely speculative index, and it's one that is really interesting to have on your dashboard, because it is a very good gauge of risk appetite. If you're looking to protect your capital and your money, you're really not going to put it in more speculative assets. You're going to put it in safer assets, maybe bonds, maybe anything that is considered a safe haven. I suppose bonds are the ones that more immediately come to mind, or some of the safe haven currencies. But if this index is rising, and as I said, this is only a snapshot, or this is on the day, then you can take it that there is a certain appetite for the risk. I'm going to look at the Russell 2000 in more detail, because it's really interesting from a VPA perspective. As I said, this is only a small part of the price action, but if you actually really crunch it down, you can see it is in a massive it's trading within a range. And what's also happening, although it's positive, can you see the price action is kind of it's kind of winding, it's compressing into this sort of point. And what's going to happen is we are then there's so much energy being compressed, the price action is compressing into this little point here, and what that means is there is going to be an explosion. It's like, but we don't know at the moment if it's going to go up or down. This could be a massive distribution top. At the moment it isn't, because the support, as you can see here, the index has actually, and it's been supported, and it goes back to February, March. But for intraday traders, it's great. It's simply been reflecting what's been happening in the broader market. So the Russell is really interesting. Keep an eye on what is happening on earnings. The season has only just kicked off, as it were, but it's going to build momentum in the coming days and weeks. And finally, on sentiment as well, this is overnight. This is global sentiment. I've mentioned it before. This is the Kospi. You think, well, what's the Kospi got to do with me, as it were? This is the South Korean index. It's very volatile. It's hugely volatile, but it's another barometer of global sentiment. And again, you can see we've had a lot of gap downs, but we've had some efforts to rally, and that was obviously yesterday. So it's a very mixed picture. It's still very fragile. We still who knows what's going to happen in terms of the virus, in terms of inflation. we may get a clue later on today with the FOMC whether they are going to start cutting down on their bond buying. As I said, who knows? What I've done today is I've actually got Amgen on my MT4 platform. Amgen was one. I can't remember whether I actually mentioned it last week, but it was one on the list. And the reason I Amgen came onto my radar was basically it was to do with the amount of we were talking about trying to discover more about a stock, looking ahead, whether it was, if there was going to be weakness ahead, by looking at what the insiders, well, by the insiders, we actually mean the people who run the company, the directors and the executive officers. And Amgen was quite interesting because we can see here back in Q1 and Q2, my notes said that in fact there had been quite a lot of insider trading, but the chart itself, with insider selling or buying, the effect that you have on it, the effect on the price doesn't happen immediately. It's you don't suddenly see maybe a load of selling going through and then the price will keel over. It does take time, but now that is, then Amgen came up with on volume. And what was interesting is obviously it has been selling off and selling off quite heavily. And I actually wondered when I looked at it earlier on today whether in fact we are beginning to possibly to see a potential reversal. I mean, it's not a classic waterfall. I mean, the efforts to rise are pretty puny, but it could be, as I said, it could be one to watch. Certainly if you have the MT4 platform and you don't have to worry about actually buying the stock, or you don't want to use options, you can actually trade it, which is why I pulled it up on my MT4 platform. Let me pull up the daily chart. You can see it. You can see here that it's much better. As you see, it's not a happy looking stock. This is the yesterday's down candle. The good news is that it ended up on a strong volume support, and it also coincides with the S6, which is the Camarilla price-based support. I'll just have a quick look at on the week, and yes, and it's also we might have some support here as well. Let's just take that down. Let's have a look how far back it goes, possibly, but it's still looking very weak. But it was just one, as I said, there was volume came in, and it's had this big sell-off, certainly not helped by the executive officers of the company actually selling very large holdings. And it was also one of the ones on the minute chart. It actually offers some very smooth price action. This is the open. It did actually gap up. This is a kind of a reaction to that wick that we had on the bottom of yesterday's candle. It gapped up. We had a volatility candle with a big wick to the bottom, straight back down again, another volatility candle, back into congestion, into the volume point of control, another attempt to rise. But what's really done for the stock this time around is it's gone straight into the third Camarilla level, and also just below the volume resistance, and that's kind of snuffed out this effort to rise. We've then got a really nice engulfing candle over here. If you put that candle over there, over this one, you actually get a shooting star, and it looks like it's possibly going to carry on lower, and your levels would then come into play. But it was just, as I said, I mentioned last week, using the MT4 platform to trade instruments and markets that you don't have to have a lot of capital. You can start very small, on these platforms. And over here with this platform, I've actually got the VIX as well, and the VIX is telling me, you know, the market it's not responding very strongly to any kind of positive sentiment. Why? The VIX did fall, but it's going back up again. But what's interesting about the VIX, it is below 20. We mentioned it last week. It's you know, it hasn't roared up, as I mentioned last week. You know, if there was a lot of fear in the market, the VIX would be trading in a much it'd be more elevated, and it isn't. It's kind of ticking along. It's really around the volume point of control. So that's the MT4. What I've actually got is Ninja Trader, which I'll pull up in a second. I just want to cover a couple of things, follow up from what we did last week. We looked at AT&T, and because there was huge volume came in, and we looked at the chart, and the chart didn't kind of warrant when it came in. Let's have a look. In fact, let's have a look at market beat here. And this is a nice example. If you remember, those of you who've been coming along, we were looking at FinViz to select stocks, and we're looking at any volume over 1 million and a relative volume of over 1.5, and this is the one that was highlighted. This was AT&T, and this was, where are we? This is Wednesday, Tuesday, and Monday obviously was the holiday. That was Friday. This was last Thursday. Yes, the volume came in. Can you see under these candles here? These little tiny squished candles, which aren't going anywhere, and it's kind of in a congestion phase anyway. So what does that tell you? You know, especially when we've got a lot of volume under doji candles, and as I said, with doji candles, they are really candles of indecision, and you really have to, again, it's patience. You have to wait for this combination of signals to play out. At the moment, you know, we didn't know. All it was highlighted onto AT&T. There was a lot of volume that came in, but you then have to look at how is that the association of that volume with the candle or the candle patterns in question, and also the structure of the chart. And we can see here, I'm using a bare chart at the moment, just so that make it a bit more clear. And you kind of say, okay, so that's interesting. That's the best that you can say. You look at support and resistance, and you simply wait. And with AT&T, what it's turned out is the support, the platform that we have under here, has been breached, and down it has gone, and we've actually we've got falling prices and falling volume. And it's just as I said, it's a really nice example of when you see a lot of volume going into a particular stock or a particular market, looking at it in association with the candle and candle patterns. If it's in a congestion or in sideways movement, that's when you have to be patient. And if I actually put that on the, let's have a look on my Ninja, where I do have help from my indicators, as it were. Yes, it's a really, really good example. Let's have a look. Why hasn't the VPOC hasn't come up? Let's have a look. Sometimes it there we are. Yes. And when we look at it in the context with the, as I said, with the accumulation and distribution indicators and with the volume point of control, we can see clearly, we could eyeball it on the market beat chart, but we can see here, we are moving in a range. We're actually in a very tight channel, and it's a tight channel that's banded by the resistance up here, which is this hatched line with the red hatched line, and the support is down here with the blue. Now, the way this particular indicator works for Ninja, and it also works the same for TradingView and for TradeStation, is that every time the price touches this area, this price zone, and it doesn't go through, that will get thicker. Now, what that tells you is it gives you an awful lot of information, because it gets stronger, and the stronger it gets, it's going to need an awful lot of volume to actually pierce it. And you can see to the top, you can just about see the difference. There's the red one is marginally thicker, I would say, than the blue. So the resistance on AT&T at the $27.60 area is really phenomenal. Plus, you've got the volume point of control, and the volume point of control is volume and price over time. And while this has been in this congestion phase, in building these levels, the market has been in what we call price agreement. It's a fair value. It's like market profile. There's no clear direction, and we know there's no clear direction because we have these very strong levels of resistance and support. Then we have that huge, was a very, very large injection of volume. I mean, you have to remember, this is 76 million down here. It doesn't look a lot, but it is, trust me, it is a lot. And I think it was one of these volume bars here that came in, and you see that coming in, you say, oh, great. Maybe that's going to push it through, but look at the support and resistance, because with VPA, you look at price, you look at volume, but you have to look at support and resistance, and where that price action and volume is taking place in the price cycle. And the price cycle for AT&T is very much, it's been trading in a channel, as we can see here, very, very tightly bound, waiting for one direction or another, but it doesn't have a lot going for it in terms of technical signals to suggest, I don't want to, it's easy with hindsight to say, well, of course that was never going to go up, because you can see where the price action is. But no, that's I want to, let's look at it more objectively and say, when that volume came in and it didn't move it further up. I know there's a wick underneath this candle, but it hit the VPOC. The VPOC is dynamic, actually. It will move, whenever there is, as volume builds, it will move. Now, what's interesting also is when the price started to go lower, you then come into what's called a low volume node. And when you get these low volume nodes, they're great because they tell you there's not a lot of resistance, and price will tend to move much faster and much quicker through that area. And in fact, we have, as the it looks like that. I haven't got live. I need to just hold on a second. I should have changed this. Let's have a look. Oh, it's on volume. Hold on a sec. Just have a look. Indicators. Volume up, down. There we are on bar close. Let's have a look on each tick. There we are. That's it. And so we can see the volume building in real time. Sometimes we turn this off simply because there's a lot of data coming in, and on the daily chart I don't particularly need it anyway. It has found some support, a volume support here, which these support lines that are derived from the volume point of control itself, they will also act as support and resistance. So, but we don't know whether, is that going to go further down? And we just have to go and look at, let me just see what's happening on the faster time frames. Here we are. So this is the open. Again, the effort to rise at the open, volatility straight into the volume point of control. This is the 3-minute chart. This is the end of yesterday's session. Again, we've got this channel building, and maybe some, the other thing you have to remember with a stock like AT&T, which is hugely liquid, it's a blue chip stock. There will be a lot of investors and traders who will have looked at the chart and say, well, when the stock gets to a certain level, that's going to be my buy trigger. Funds and traders, individual traders. So with a stock like this, it's no surprise to see you know, some buying coming in, and you can see the amount of volume that's under that candle. But it's a volatility candle, and we know with volatility, straight back into the spread of the candle, another effort. But this is the key candle. This is the candle where you've got another wick to the top. It's like a shooting star. Support and resistance, not a lot of volume underneath it. So, you know, there's weakness there anyway. There's not enough to take it, certainly not enough to push it through all this resistance. And if you were looking at this point to think, well, you know, wait till the market calms down, this little combination of signals to and I'm including, you know, the support and resistance element as well, that would be a good place possibly to think, do you know what, that's really not a bad place to potentially take a short on this particular stock. Really nice because we've got some low volume nodes. We've got a decent amount of volume under the down candles. Got an effort to rise there, reasonable. It doesn't do very much. Straight through all these key levels, which is the S3 and the S4. There was a retest of the S3. We often get a retest before it goes lower. And now we need to know, well, you know, the next question is, where is it going next? It's stopped. The volume support hasn't been able to hold on this time frame. This is the tick speed indicator. It's green, it's always green at the beginning and tends to be green at the end as well, and also during the session itself. But it tells us there's lots of activity. Then it kind of calms a little bit. It goes into the orange. Then the red is really, you know, the activity dies, and then it begins to you know, pick up. Doesn't mean that you know, when it goes into red, you're not going to get any movement. It simply means the movement is certainly not going to be as fast as when it is either green or orange. And it's certainly, as I said, it's we'll have to wait to see whether this support line actually holds on this chart. And just to put that into context with some levels on the slower time frames, haven't come up on my daily, which I don't know why. So let me just find the 60-minute. Hopefully I haven't got enough data. Let me just put, I don't want alerts. Again, this is the reason why these charts sometimes are truncated. It's simply to save on loading loads of data and you know, running the computers out. Right, here we are. Yes, on the hourly chart. Where are we? Just to give us some context of what is going on at the moment and whether it's going to carry on lower. It's a little bit too far out. Let me just have a look at the 10-minute. The 10 minutes is, and again, another volume point of control. Having the multiple time frames, and if you see VPOCs across the time frames, that is a huge confidence builder in the sense that, you know, this isn't going to go anywhere. There's only one direction this is going at the moment, and this is, you know, this is going lower. But as I said, bear in mind there's something like AT&T. Is a hugely liquid stock. It's a blue chip. There are going to be potential buy orders all the way down because, you know, people look at stocks and they look at the daily charts and they think, oh goodness, it's, you know, it's been falling. It's been falling, like you can see, it's now falling. Oh, great. Maybe it's time for me to, you know, it's a good place to go and buy. But with VPA, you know that there's potentially much more downside. Certainly, if that's a classic waterfall, you've got falling prices and rising volume. For that to come to an end, you are going to there's going to have to be a dramatic hammer candle or some other, you know, strong buy signals coming in for that to, you know, to start reversing. Is it going to be a V shape? No, the chances are it will go into a congestion. And talking about hammer candles, there was one stock, two stocks actually from last week as well. One of them was HBI, if you recall. Let me just do if I got it up here. No, I haven't got it up here. It doesn't matter. Right, again, this was another stock that we looked at, and there was a lot of volume came in as well. And forget all this, and it was this candle here, and that looks like a really nice hammer candle, you think, oh great, you know, there's obviously buying coming in here. But if you recall what I said last week, is you have to be patient with hammers and shooting stars, strong candles, two-bar reversals. You have to wait until they play out. And with this one, it's a case of we have to wait, simply because, and the reason we have to be patient is it may just be that the market makers, you know, that they have to shake out more of the sellers, as it were. So yes, they're not actually ready to take it higher. So there's not a failed candle. It's just one where it hasn't quite played. It hasn't played out immediately. But there was another chart that I picked up, which is SBRA, where we had exactly the same. We had the hammer candle, and it has played out. In fact, if I pull it up here, SBRA, you can see it more clearly. Here we are. There. A really, really nice move down. You look at this candle, and you look at that volume. You think, oh yeah, but why didn't, you know, I've got massive volume under there, and that didn't go, and it didn't, you know, it didn't sort of crash lower. There has to be buying in there. That range of that candle, compare, you know, on that kind of volume, is an anomaly. It's such a glaring anomaly. If there was massive selling in there, that candle should be much wider. It'd have a much bigger range. There isn't. So that's another way of looking at the chart and seeing whether a particular move is possibly coming to an end, either to the upside or downside, by picking out the anomalies. You know, it doesn't look right. It doesn't, but look at it, it doesn't play out straight away. The next candle, a tiny little doji candle, again with a lot of volume, another anomaly. Nothing is happening. Again, a little bit patient. Then we have this one, which is the one with the wick to the bottom with the volume, and that I would, when I saw it, I said, yeah, that looks as though that is playing out at the moment, and this is a healthcare right, and we have to wait and see. Now the question is, we're going to need, that volume has got to translate cumulatively into a decent move higher, but it doesn't happen immediately. But it's possibly one where, you know, you could think, yeah, okay, I'll wait a bit and maybe see what happens. And finally, what I want to draw your attention, bring up, you know, we've been looking at charts where stocks have been ramped up. Some of them are kind of what we call fallen angels, and then others have, you know, they've been it's pump and dump, let's call it that. And there's two. One of them was highlighted by one of my Twitter followers on a stock called Jupiter Wellness. And another one I found when I was looking at the volume, and also looking at seeing how whether there was any strong insider selling, and that was a stock with a ticker called BLI. They're actually both IPOs. And again, they're IPOs. You know, people like IPOs because they like to feel they're getting in on the ground floor, and you know, and hopefully, you know, the stock will carry on higher, etc., etc. BLI. Let's have a look at BLI. Where's that gone? Oh, by the way, this is BTX. Those of you who've been coming regularly will know. This is the one I've got on my radar, and I'm waiting. This is the longest, which is a classic pump and dump. And by pump and dump, this is, you know, you can see here, long period of congestion. Then you have the volume coming in, and then up it goes, zoom, a lot of volume underneath it, but big wicks to the top, volatility all over the place, and then bang, down it goes. So, you know, if you bought down here at if you bought down here at 9 and got out at 80, great. But if you watch that go up and you got in at 74 and 80, oh boy, that is painful and it's wicked. But it's back into a strong congestion, a very long congestion, with reasonable volume going into it. So it's really one where I go back and look at it every sort of couple of days just to see what's going on, and just keep a track on it, and we'll keep referring back to it while we do these sessions. Right, I don't think I've actually, right, let's start with Jupiter. Here we are, Jupiter Wellness. This is one of my little chums. Here we are on, if you don't follow me on Twitter, it would lovely to have you there. What I'm doing now is my Twitter feed is primarily stocks. It is stocks and commodities. It's not forex. It's not forex. There's going to be a completely separate forex feed, the Twitter feed, and there's also going to be, and my blog is primarily the analysis on my blog is primarily, again, stocks and commodities, and the forex one, I'm resurrecting an old site that I have here. And this is my little friend. Oh, here we are. He actually highlighted it himself. He looked at it. This was it met all his criteria. So I took a look at it myself and saw that it had been an IPO. Looked at the chart, which I have here. Let's have a look at let's pull this. There we are. So there was the IPO chart. Not huge, not one that went up to $80 like BTX, but very, very volatile. Once it did launch, volume obviously coming in at different times, and I call this a sort of another IPO fail. And then the crash down, the congestion, the waterfall, back into the congestion. But look, he's very, he just highlighted it, and he said, look, see what's happening here. There's a volume is coming in after all this, this carry on since it's only November last year. So it was just an example of an IPO chart, an IPO stock that sucks in a lot of people, and it is let's be honest, it is another kind of pump and dump. But the other one that I found myself was a company called BLI, Barclay Lights, and this is much more. And I have a feeling with this one there's a lot of short interest. Here we are. All right, here, let's have a look. Yes, and now this one was also an IPO, a bit earlier than the other one. It went back to July last year. Looked sort of perfectly, nice stock, but look at it, goodness gracious, it went all the way to 108. But this one also had an awful lot of insiders. It's almost as if the executors, the executive officers of this company, if you look at their activity, you can see this is last year from Q4, 158 sold. I mean, there was just sell. So not only, and it kind of, there are people who've, people's pension funds, people's savings, this has been hyped up maybe, and they've got so much, they think great, pumped it up, and it's just been a slide, and it's all the way down to $22. But again, it maybe, but if you're stuck up here, either as an institutional investor, this is the other thing. Someone emailed me and said, oh, well, I'll just follow the institutions and do what they do. Yeah, but they get sucked in just like everyone else. So they're not necessarily a a shining example of being able to, you know, get things right. I'm not saying that with VPA we can time the market, but with VPA, if you can read the chart and you know what you're looking at in terms of the price cycle, where you are in that price cycle, and looking at AT&T, go back to the daily chart, you are clearly not, you are now in a downtrend, but preceding that, you are in a, you know, in a very long and very compressed and very highly concentrated congestion phase. And, you know, of course, you may, if you are running a fund and you have to buy, you know, think, well, I've got all this money coming in. When we were learning this stuff years and years and years ago, the guy who taught us a lot about this relationship, you know, the basics of the relationship between volume and price, he was aware of, you know, what goes on on the institutional side. He says you have to remember that institutions, and by that I mean funds, pension funds, you know, hedge funds, anyone who is responsible for looking after other people's money, they have barrel loads of the stuff, barrow wheel loads of the stuff that come in every day, every week. Premiums, people wanting to place their money because they want a return on it. They have to do something with it. And I know, you know, there is this argument, well, they all use fundamentals and they only look at the, occasionally look at the chart. We won't go into that at the moment. So, as I said, that also, it explains these buy orders at different levels, because they, you know, they've looked, says, okay, well, I want to allocate some of this money to, that's, you know, stocks in this sector, something like AT&T. When it gets down to there, I'll just buy it and that's it. But they don't really look at the chart and saying, well, actually, it's just the beginning of maybe a major downtrend. They don't have, maybe they don't have the luxury of that. But you, and us, you as retail traders, you know, when you look at a chart, we do pay attention to the fundamentals, and that's something that we'll be talking about in more detail in up and coming webinars, and certainly something we're going to go into very great detail when we look at putting together the stock trading and investing program. But the chart tells you so much about where this price is likely to go. And I'm not saying you pick you know, a precise bottom or a precise top, but you can save yourself the pain of having to sit through a major drawdown and possibly being stopped out by just exercising a little patience. So that's what I've got to say on that one. Are you okay, David? All right. Yeah, yeah. Fine. That's AT&T. Or what am I going to do? Looks like, you know, the support levels have actually held. We've gone into a bit of a quiet period, as the indicator is telling us. Markets always move much faster when they're falling, not when they're rising. So, you know, as I said, we'll have to be patient. And if it does reverse and go back higher, where's it likely to go to? Well, first of all is the S3. And then, as I said, we do have volume points of control at key, you know, at similar levels across the time frames. So, you know, if you were going to take a trade on a chart of this structure, you are kind of going against the major trend, which is essentially, you know, it's bearish at the moment. Does that mean you don't take the trade? No, but you are aware that you are counter trend trading, and you know there may be enough in there for you because you are only going to be in this trade for a very short period of time. Right, the one thing we haven't done so far, and we will, it is something that which we are sorting out at the moment, and that is looking at time and sales, and also looking at order flow to see how, you know, the background to, for us, they provide a background to what is going on these charts at the moment, and it's just something we haven't had time to set up properly. I've got to get it organized on NinjaTrader. David, I think have you partially got it? I think he's got it there. Is it on TradeStation? David has got it on his NinjaTrader, so we'll look at that, and that's another element that we can certainly use to help us with looking at these levels, looking at the see where those orders are sitting. You have to remember with order flow is that the orders that are sitting there, they're waiting to be triggered. They're not always triggered. There's a lot of spoofing goes on, but at least it's a level, and you think, okay, is that going to impact the price action that I see at the moment? And if it coincides with, a very strong support level or a very strong resistance level, and something with the volume point of control, then you get this confluence, and obviously that's going to give you more information about what is likely to happen next. This is the 1 minute chart for AT&T. As I said, it is to be fair, it's trying to move higher, but when markets move higher, it's always more of a they always move more slowly higher than they fall. So that's what I've got to say. If you've got any questions on anything I said, though, please just drop them into the chat box and we'll answer them as we go along. And one final thing you may have noticed to date, we haven't been using a VWAP. And again, this is something we will be introducing simply because it's a great indicator. But so many day traders use it. But David and I have our own view of how to construct it. We're not going to just take a standard one. We're going to look at it and see whether we can incorporate some other bits and pieces into it as well.
Hi everybody. No, it's fine. I'm okay. Sorry. We've just got to swap feeds around, but that's fine. I've got what I need. Warm welcome to everybody. Good to have you with us. And let's just move the chat out of the way. Hopefully you can see my screen. Hopefully you can hear me. If not, it's all a bit pointless. Anna mentioned time and sales. I've actually got time and sales over here on the left-hand side. And basically it's printing all the orders that are coming through. I'm actually starting with copper, which is HG, and there's a lot of price action going on, really nice price action on the commodities markets. I've got soft commodities, I've got gold, I've got silver, not a lot going on oil last looked, and I'll also pull up the indices too. But this is basically copper, and the reason I just wanted to show this to you is for several reasons, not least of all, it's a nice break away from the VPOC. Really nice. You get these very strong levels around the volume point of control. You get these very strong levels of price resistance and price support building. It's like a corridor. It's like a tunnel that you get. As you get the channeling, it creates the roof and the floor and the ceiling. And then you start to see the breakaway. And we've obviously got this nice breakaway on good volume. So we know we've got a decent trend developing here. Absolutely no down candles in there. It's just moving nicely. We move away from, once we get away from this high volume region in around the VPOC here, once we move into this low volume area here, right the way through from 420 up to 435, from 442 up to 430.35, then we've got a low volume area here. We expect the market to move through there fairly easily, and it does, and it moves along quite nicely, quite smoothly. Nothing particularly frightening, a little bit of weakness here and there, but that's what you expect parcel. Then at the top, you get this sudden rush of price action, this insurge of volume, huge volume comes in, and you get this rapid rise in volume, rapid rise in price, big widespread candle, and you get the volatility trigger which appears. Now, when you see that, this is a 1 minute chart. If you've already got into this market and you see that, I can guarantee you one of two things. the reaction that you're expecting is for this to carry on. It's normal. That's what we expect to see. There will be a lot of Johnny-come-latelys who will have seen this break away. They'll be waiting. As soon as they see this, they'll be jumping in. And what happens? It either reverses or it goes into congestion. Neither of which you want to sit in. So once you start, and the beauty of this indicator is that it actually appears in real time. So you don't have to wait for the candle to close. Now on a 1 minute chart, there's very little difference. It's not that important. But if you're on a 5 minute chart and it occurred in the first couple of minutes, then it is important. And that is why it's so important that the volatility indicator actually triggers in real time. So you don't have to wait for the candle to close. As soon as the price action has moved outside the average true range, which is what volatility is all about, and if you see it associated with a huge influx of volume, then you can be rest assured that the big operators, the market makers, are participating. They've moved this up dramatically, and they're either going to reverse or they're going to go into congestion and make people sweat. This is turning into a reversal. It's gone back down to the volume point of control. And most of these people who jumped in here, all these traders who jumped in here late, will now be regretting that decision. And they'll either have a wide enough stop to ride it out, possibly hoping it's going to continue higher, or they've already been stopped out. So if you see this kind of price action, you're in a nice trend, and then suddenly, what, you get a volatility trigger for whatever reason. I have no idea why we've got this trigger. I haven't got the news feed running here. Anna's got it over on her side. Could well be someone said something, could be a precursor to FOMC, could be anything. It doesn't matter. The fact is the market rushes up. You've made another load of money on the trade, close out, either close all of your position out or 90%. If you've got 3 or 4 contracts on, take 3 off the table, leave 1 to run. Ideally, take them all off. If I see that 99% of the time, I will close out. I'm not interested in sitting through a potential reversal or a potential congestion phase. And to be honest, had it carried on higher, what have you lost? All you've lost is maybe a little bit of spread in the move higher. So if the candle carries on, what have you lost? Then you're into looking at it in multiple time frames. Obviously, what we're seeing on the 1 minute, don't know what we had on the 15-second. Let's have a look. Okay, we had exactly the same thing on the 15-second there. Big influx in volume, volatility trigger, weakness at the top, selling. On we go down to the VPOC on 15-second. That's the 1 minute. This is the 3 minute. Exactly the same sort of principles. We had nicely rising volume. We had nicely rising price action. Nothing frightening there. Went through this low volume area, nice and smooth, nice and quick. It would have gone through there nice and easily, nothing particularly frightening. And then we get this candle here, big wick to the upper body, big volume associated. What are we expecting? Weakness. We've got more weakness here, although note the volume is falling away. So although we've got weakness here to this candle, the volume is actually falling in line with the price, which in terms of a continuation of a reversal, it's probably not going to happen, because to associate price with volume, the volume with a down move should be rising and not falling. In other words, it's in disagreement. To see 2 candles falling with falling volume is anomalous. If that move is going to develop some momentum, you're going to see volume rising again. Exactly the same as you do here in a rising market. You want to see rising volume in a falling market if it's going to develop strongly, which in this case, it doesn't look as though it is from the analysis of volume. Down onto the 5 minute chart, what have we got? Exactly the same sort of situation. Nice move higher, supported by good volume, and then we get a higher volume still, and we get weakness at the top here with this big wick. Then we've got a candle of indecision, doji candle. It doesn't signify that the market is going to reverse. It just signifies that we have indecision. Nothing more, nothing less. In other words, the bulls and bears are in agreement. It's no great surprise we're seeing it. We've had this rush up. There's a lot of profit taking going on in here, which is also going to force the price lower as well as that selling comes onto the market. Oops, sorry. Disappeared the chart. I'll go and find that one again in a minute. And then we're up onto the daily. Here we're on the daily chart, and this is what we're seeing. And obviously from a daily perspective, we're looking at, have we got any levels of price-based resistance or volume-based resistance which are going to come into play and cause us problems in our intraday trading? And the short answer is no. very lightweight in terms of these price-based resistance levels on the accumulation distribution indicator. You can see how strong these were down here, very strong, clearly important when they were breached or held as support. But these levels up here are very lightweight. This is has been tested a couple of times. This has been tested once. And really only significant once we get up to this level at 4.55. The other encouraging thing, if you were looking at this longer term, is first of all, be aware that we had a top out here before, we had this rally before. So it's important to see how this candle closes off with the associated volume on the daily. But then as we move into this region here, this is light volume, much lower volume than over here, substantially less. This is a low volume region, and then all the way up through here. So if the market does manage to break through this price area here, then we should see this price level here taken out fairly easily, because it's going to take less effort to move through here than it would do through an equivalent area here. We've got much more concentrated volume. So in terms of a longer term rally, this should move through here relatively easily. We've got price-based resistance overhead, which is probably going to come into play at that point. But then if it breaks through there, we could see it go all the way back up to this region up here at 4.6, 4.65 maybe. So that's what I wanted to show you on copper. Just going to see if I can find that chart again. There we go, fill that hole in. So that's where we are with copper. Really nice example. Now that could be on a stock, could be on commodity, could be on spot forex, could be on a currency future. It doesn't matter. The principles are all identical. Let's have a look at gold. Gold's had a really nice run up this afternoon, still carrying on. Really nice trend. Been absolutely solid. Where are we going? Let's have a look at the 5 minute. And perhaps if we start with the daily, here we are. Gold is now starting to climb up towards 1800. Now, bear in mind, this is ahead of FOMC. This could all collapse like a souffle, depending on what happens later on. But as I've said many, many times, gold and inflation will tend to run together. And given that we have got inflation that is, it's just everywhere you see it, in food prices, in energy prices, everywhere. There's supply issues all over the place. You know, this is what is happening. There is inflation being driven into the economies, and the problem with the economies right now, certainly in the UK, the danger is moving into stagflation, where basically you've got rising inflation, but you've got an economy which is stagnant or falling, and that's the big fear on the part of the central banks. That is their number one fear right now, that if they raise interest rates to curb inflation, they actually kill off and create an economy that is already weak, and they send it into a deflationary environment where you've got a stagflation scenario developing, which is tremendously damaging and very difficult to get out of. So whilst there is talk of interest rate rises, I can guarantee you that whatever they may be or whatever may be considered, they will hardly be substantial because of the risk of stagflation, which is now most certainly on the horizon. In terms of beneficiary of inflation, it should be with gold. We've remained bullish on gold. We're now seeing it today. Whether that is going to maintain today, we will wait and see later on, but it's nice to see. Now, the question obviously longer term is, let's pull up the daily chart, just move that out of the way, is where is gold going later in the longer term? Well, from a technical perspective, you can see pretty clearly where it's heading to. It's not going to move through here pretty dramatically, because that's where the volume point of control is. That's where we've got the heaviest concentration of volume. So in terms of a pause point for this welcome rally for gold bugs, it's almost certainly going to congest around the 1810, probably between 1800 and 1820. That is where we like to see some congestion developing. If the bullish sentiment continues thereafter, driven largely by inflation or weakening dollar, or both, at the moment the dollar just on an intraday basis is selling off, but not strongly, but it is down. So it's certainly giving some impetus and momentum to the move on gold. This is absolutely critical. 1840 could not be clearer as to the level at which gold either reverses again or breaks out and moves on towards 1900 and possibly even on to $2,000 per ounce. It is this level and this level alone which will ultimately define that. It's got a very strong resistance area. You can see it's topped out there several times before. It just could not get through that particular level. If it does break through, then obviously the volume here is very light. We go up to the weekly and we go out to the monthly to establish the levels, support and resistance, price-based, volume-based of where gold is going longer term. But that's what we're seeing right now. But a really, really nice smooth move all the way up. This is on the 5-minute. Trend monitor supporting as we expect to see. The trend monitor we developed with one simple objective in mind, to try to help to keep traders in trades once they're in, because if you're constantly making small wins, but you're also making small losses and more small losses than you will small wins, your trading account's not going to go far. It's just going to slide lower all the time. You have to maintain some bigger wins to outweigh the smaller losses. You will always have more smaller losses, but you should have fewer but larger wins. And that's what the trend monitor was developed for. And it's used in a multiple time frame array, as I've got it here. And it's there to support you when you get these little moves like that. Now, obviously, volume also helps in these pullbacks. This move here, for example, this was a nice solid candle. Okay, no problem. We've got decent volume. Maybe expect to see a little bit more volume driven in there, but broadly speaking, you know, this candle was on this volume, that candle was on that volume. So we perhaps should expect to see the volume up here, maybe nearer twice rather than what it is at the moment, which is sort of, I don't know, 1.5 maybe. But nevertheless, you know, a decent candle. Then what happens? Then we see the market start to reverse. No great surprise after this, because there will be profit taking at the very least coming in here. What happens? Decent volume under there, very narrow spread. If you compare this volume with, you know, this candle over here, this is where we started to see volume as well. So you start to think, hang on a minute, you know, I wonder if this is compressed. The buyers are stepping back in here. We're not done here. You know, if this were heavy selling, then the candle would be down here somewhere, and it isn't. So, you know, we're looking at buyers coming in here. We're looking at buying coming in to pick up, to absorb that selling pressure. Volume falls away on the next one, which is great. As I said earlier, if you had 2 down candles and you've got volume falling, fine. It's what you want to see if you're in an uptrend, because it just confirms that, you know, they're likely to see continuation of trend. We do see it. We get rising volume again. Then we get some more selling coming in. Okay, not sure at that point. Is this the end of the rally? Could be, could not be. We have to wait and see. But then we get a 2-bar reversal on it. So, you know, it kind of gives us more confidence, because if you overlay this candle on that candle, you pretty much got a 2-bar reversal in there. On up we go. Volume supportive, all looks fine. You know, it's rising. And now we're getting up towards the top here. Now, the other thing, as we get up towards the top, we're moving into a low volume region for sure, but also we're getting up to a psychological point of $1,800 per ounce. And whenever you get to these big numbers, 1750, 1800, 1850, whatever they may be, 25s and 75s are less significant. Half numbers, 50s, 100s are hugely significant. And of course, you know, 2000 is a huge number. 1900 is a huge number. These are big numbers psychologically, where inevitably any price action will be overweighted with a lot of orders sitting there waiting to be executed, because basically traders are lazy. They'll put them on 5s and 0s. So you can expect, particularly these big round numbers, to see loads of orders executed at that point, and therefore the market to pause and congest. So that's what's going on in gold. Really nice smooth move. You can see the trend monitor here. You know, we have got it on 15-second here, bullish, bullish, bullish. Just starting to come out a little bit on 15-second. No great surprise. We're seeing this little bit of reversal coming in. Bullish on here, bullish down to 5, bullish on to 10. Daily, obviously you wouldn't expect any change there for the time being. That's on gold. Let's just head over to see where our indices on, and then we'll go over on to, I've got the softs up there as well, nice price action there as well. This is basically the 3 indices on daily. Got the YM, the NQ, and the ES. There is a certain amount of diversion at the moment. We've got the NQ moving up, we've got the YM moving down, and we've got the ES kind of up and down. It's sort of mildly up now. It was down earlier on. So there is some divergence across the 3 of them. In terms of, just go to the multiple windows, show you a bit easier. I've got the 5 minutes at the top there, but if we just go on to the multiples here, this is on the YM. There was a really nice smooth move lower. It's on 5 minutes earlier on, down onto the volume point of control. Plenty of opportunity to trade that to the short side. Now we're going to start to move into congestion. No great surprise, because the markets will start to calm as we begin to head into the announcements later on. And we're seeing that pretty much across the charts. 2-bar reversal there. So we're seeing a little bit of a pause point. We didn't get a 2-bar reversal here. We got a hammer. And that's the difference. And it's basically, that is what you're seeing on the 5-minute chart over here, you're seeing it reflected on the 10-minute chart like that. And that's one of the beauties of being able to overlay charts, indicators, candles rather. Now you can't obviously do that easily with multiple candles, which is why we use multiple charts. You can do it easily with 2 and to some extent with 3, but beyond 3, it's pretty much impossible to actually keep track of it in real time. Hence you use multiple time frames. You can see here also on the 10-minute chart, once again, the power of levels, of price-based levels and their significance. This level here on the accumulation distribution indicator is very strong because it's been tested multiple times, and when the price action comes up to it, it's holding throughout there. It's a really strong level. Equally to the downside, this was a strong level, but it was breached in this move through here. If the market tries to reverse against it and you've got a position, you've gone short maybe, it's always nice to have these levels in place because they're giving you protection against a reversal pullback. Trying to rally, volume's falling away, so this hardly looks it's going very far. Wick to the upper body, volume falling as well. So this rally isn't going any great distance soon. But then there's no great surprise given the fundamental news that's on the horizon as well. Again, I've got time and sales window running down here. What time and sales gives us is the real-time orders coming through the market. I'm not interested in 1s and 2s and 4s. They're just noise level. What we're looking for, and we're going to go into this in a lot more detail, and we're also going to develop some indicators based on this. What we're looking for are those big numbers and how the market reacts to those big numbers. So that's really what you're looking for in terms of time and sales. I'm not sure we've got any recently. No, it's all sort of 1s, 2s at the moment. So there's no big blocks of orders going through. 20s, 50s, 100s, that sort of type of volume, which will really move the market, and then it'll give you an indication based on how the market reacts, certainly on the 15-second, as to how the market reacts to those big blocks going through, as to whether the market is receptive to a bullish phase or is accepting a bearish phase, whatever it may be. A couple of 10s gone through there, but again, not hugely significant. So that's where we are in terms of the indices. They are starting to calm down, no great surprise. Let's go and have a look at the soft commodities. There we go, because we had some really strong moves here as well. Again, daily strung out along the bottom. This is on soya, corn, and wheat. The Z contracts. These are on December contracts. And on the top level here, I've got the 5-minute time frames for each of those. Again, really smooth price action, really nice price action supported with VPA. Let's just see where we are on the dailies. So on soybean, this would have been a patience trade for longer term traders. Why? Because we've come down to the volume point of control. We've had a phase of congestion building through here. And again, this very strong platform of what was support at that point is then breached, and look how the price action tries to pierce it again. It comes back up, but it's so strong. And this is what gives you confidence if you're shorting a position like this. A protective barrier of price-based resistance. What was support has now become resistance and is now acting as a barrier for you in the event of any pullback against it. So you've gone in short, I don't know, maybe around here somewhere. The market, this day it tries to rally and it bounces off it and it comes back against it. Your stop loss will be somewhere above here, somewhere or the other, maybe beyond the VPOC. If it's within your money management rules, then you put it higher still above, these two here, up here somewhere, maybe above this old top up here. But either way, it gives you some protection. And it is one of the abuses of trading breakouts and breakaways, because you get very clear levels defined, not only for your entries, but also in terms of positioning your stop loss. So you have all these natural barriers on the chart to give you those clues and information about where to position your stop loss. Trend monitor, you can see, has been bright red for some time. A lot of heavy selling in yesterday's down candle. Let's widen that out a bit, there we go. So there was a lot of heavy selling in here. And this, indicative of weakness, the market's trying to rally, decent volume under there. It's really not going anywhere. Confirmed here, it's trying to rally, falling. Down we go again. We've got another effort to rally here, trying to rally, and it's really very weak at the moment. That's on soybean. And it's a sort of similar picture on, let's pop this open, this is on corn. Now this is a 5-minute example of a breakaway trade. We were looking at, a daily. This is a 5-minute example, but the principle's exactly the same. We've got some very nice price levels in here, which are acting as resistance. And we've also got some nice levels in here, which are being taken out gradually as we move down the chart. Finally, we break away through the bottom of this lot. We start to see decent volume coming in as the market gets underway, and on down we go. And this is a really nice example of, as the market moves, we had an effort to rally, big effort to rally, decent volume under there, and then it starts to break. We had volatility, didn't move inside. Okay, we break down to the next one. Then we get a little rally developing. What's happening on the volume? It's falling away. So is that a positive sign? No, it's a negative sign, because this is anomalous. Because if this is going to rally strongly, then volume's got to be rising. It isn't, it's falling. What are we expecting to happen? Well, at the very least, some further weakness. We do get it. We get a nice price waterfall, lovely, down into a volatility trigger on high volume. Terrific. At that point, I would close out, because we're coming down to the VPOC itself. So I don't particularly want to be sat through another period of congestion. I'm going to bank my profits. I'm going to sit tight, wait, and just sit it out and wait for the next phase of price action to develop. Or I'm done for the day because there's fundamental news or whatever it may be. But essentially, that's the kind of plan that you would follow. So we're down at the volume point of control. We're expecting congestion, and we are getting it. Finally, up onto wheat. There we go, and a similar sort of picture there. And we've actually broken away from the VPOD in this example, and we're moving down. We had a low volume node here. We move through there pretty rapidly. Another one here, we move through there quite rapidly. Volume starting to build a little bit, getting a little bit of congestion now, a little bit of buying coming under that last candle. We had that up candle, okay, that's on decent volume, that looks okay. But given what else is going on in the context, it's not to say that these soft commodities will all move in lockstep. They won't necessarily, because they are all governed by different, not only the technical aspects, but primarily the geographical aspects, which will be very different to each of them. So don't run away with the idea that all soft commodities move in lockstep like the indices do. They don't, but often they do, particularly if the geographic areas, if there are no particular drivers of supply and demand which are influencing one more than another. There may be trends, but if there isn't anything significant, then this is not unusual to see, but don't expect to see it every single day. It just happens to be happening today, and it's nice to see. So that's where we are on softs. Where are we? Silver. Let's have a quick call on silver, because if gold's rising, then silver should be rising. And it is to some extent, but it's certainly not rising with the same alacrity, the same speed that gold is. But nevertheless, gold is managing to pull silver upwards. So if you're trading gold, then it's always helpful to look at silver and vice versa. Again, bullish, trend monitors blue throughout on the faster time frame, down to 5, down to 10. And that's where we are with silver. Let's just see if gold actually paused at 1800 or managed to get through there. I would imagine it's paused. There we go. That's what I was expecting. So it's pausing there. No great surprise. It may continue on to 1800 and beyond. But I'm expecting everything to calm down. And once again, if you look at the volume on that little reversal there, what are we seeing on the volume? Falling volume, falling price. What does that tell you? It tells you that, generally speaking, that is not going to go very far. And in particular, also note the spread of the candles is narrowing. You've actually got, we talk a lot about catenary to the upside, where you see a curving, in other words, a narrowing of spreads. Here you're seeing a narrowing of spreads to the downside. So it's a similar sort of principle where the spreads are narrowing, so it's weakening in terms of the momentum that is coming into the market and in terms of the volume that's falling away there as well. But I'm expecting everything to calm down now as we move towards the 7 o'clock, I think is another 3 hours or so. This is basically on, sorry, drop that out of the way. This is on Trading View now. This is just where we are in terms of the principal indices. That's the pound, not particularly interested in that at the moment. This is the yen, this is what the yen is doing. So it's kind of going sideways. Dollar is sort of falling, but not dramatically, and that's the euro. So that's where the 4 indices are right now. Let's just pop that time and sales window back in place. There we go. Let's just wrap up. Oh, let's have a quick call on stocks. Got a few stocks. Oh, I just had over onto TradeStation as well, very, very quickly. This is Caterpillar, one that we follow religiously. We always have done since the year DOS, I think. Not that one. This is, sorry, Caterpillar on the top here. One on, let me just pop this up full size. Actually, I'll tell you what, let me move on to TradeStation because I think I've got TradeStation there as well with Caterpillar. Let's have a quick look. Where are we? Let's go to stocks. Caterpillar, there we go. There we go. That's where we are with Caterpillar. What I wanted to show you on stocks, and really just to round off, if you will, not so much to look at a particular stock, but really just to highlight one aspect of stock trading, which is so different to everything else. When you're trading Forex or when you're trading futures, the actual number of instruments you have to deal with, yes, you do have a lot of time frames, but the actual number of instruments you have to deal with is relatively limited. It's relatively few. Most futures traders are trading an index. They may be trading gold, they may be trading oil, they may be trading copper, might be doing silver, might be doing some softs, but essentially you're not dealing with thousands and thousands of entities. And that's what makes stock trading and stock investing so different to everything else. You are dealing with, well, between 10 and 15,000, if you pull in the major indices, all the major exchanges, you're dealing with a vast number of stocks to try and identify those which you want to filter or consider in terms of your watch list. And that is the huge difference. And it's finding mechanisms and ways, either through the platform or through third-party software, however it is, to actually identify, the filters you set up. There are any number of filters. I mean, we would filter on volume, for example. We would look for stocks which have maybe had a 2% move on the day. We would look for a minimum number in terms of volume of shares traded, might be 1 million, whatever it is per day. You set up all these criteria and then you start all your filtering, because that's what you have to do, because it is peculiar and particular to the stock trading and investing world, not to futures, not to spot Forex, not to currency Forex, whatever. And obviously the same is true of ETFs as well. So when you move to platforms like TradeStation, for example, it's so important. TradeStation has 3 ways of doing this, and I've got them set up down here. I'll run through them very quickly. This is on Radar Screen. Radar Screen takes up to 1,000 instruments at once. You can have 1,000 stocks screening on it. We've got the indicators running here as well, which is an added bonus. And you can obviously have these on multiple time frames, but essentially it will filter on 1,000 stocks. And the difference is it will filter in real time. As you can see, it's filtering in real time. So all the data is coming in and it's telling us what's going on in terms of volume down here on the right-hand side, in terms of when we last had a volatility candle on this particular time frame, what's going on in terms of our trend monitor, what's going on in terms of our trend dots, where our trend line is in relation to the midpoint. So it's all coming in. I've just got the Dow 30 set up on here, but I could have any of the standard ones, which are on here, which is under the data window here somewhere. I won't do it now, but I could move this to NQ. I could have all stocks, whatever it may be. But the fundamental point is they are being pulled in live. When I move to something like this, is called hot lists. Now this is a predefined setup on the TradeStation platform. And again, you can see the sort of variance you're looking at, the options available, percentage gainers, percentage losers, they're losing in terms of dollar amounts, they're losing in terms of percentage amounts. Are we getting to 52-week highs and lows, gap downs at the open, blah, 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 gap up, etc., etc. We've got volatility lists, and when I open the wall, we've got volume lists, etc., etc. Now, this obviously is a tool for sorting and sifting through this vast amount of data, but it's not an intraday tool. It will update, but it's not an intraday tool as such. And the third one is Market Scanner, which is exactly the same as Hot List. It works, but it works in a very different way, because on here, if I just go and edit this very simple scan I've got here, what you do here is you are sorting on, first of all, do I want the entire market, or do I want a particular index, stocks in an index? You set them up here, and then the difference is here, you can also bring in technical aspects. So what I've got set up on here is basically, I want all stocks with between $0 and $300, very random, and I want to know those that have got an RSI greater than 50. That's my selection criteria, and you just click that, and boom, it will come. But again, this is in a very static way of sorting and sifting, so it's the sort of thing you would do at the end of the day. That said, I won't show you now, but there is also a way that you can introduce alerts within this mechanism, within this sorting mechanism, scanning mechanism, where you can actually alert yourself to things which have been triggered. So for example, you could say, I want to have an alert set that when an RSI on this particular filtering setup, when an RSI of 60 is hit, please send me an alert for that particular stock. So it's very sophisticated. I'm not suggesting that everyone rushes to TradeStation. I'm just pointing out the big thing with stock trading and investing is really down to the criteria, how you sort, how you're going to do it physically, what software you're going to use, how you're going to sift through all this vast wealth of information. And of course, in addition to that, you want to have all the fundamental news. You want to know when stocks are we're in earnings season. You don't want to be buying a stock or selling a stock when you've got an earnings release coming out the day after. So you need all that information as well. It's a vast amount of information that you have to deal with in real time. Right, let's just go back and just wrap up, see where we are. Probably quietening down now, I'd imagine. Let's just have a look at the three of them. There we go. Yeah, so it's all, we're moving into quiet periods now, just ahead of the news. So that's where we are. So that's it. I hope you've enjoyed today. Thanks very much indeed for coming along. Enjoy the rest of the trading session. We will be back again next week with Forex and stocks. So we will see you again soon. Stay safe, enjoy your trading. See you soon, and bye for now.